Hello and welcome to Pro Trader Strategies market commentary for Friday, January the 24th. Today's the day I've been talking about, but my name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, how that impacts the overall markets. I do about the same thing in these daily market commentaries for you guys, but I expand on that a little bit more and talk about all of my trades, when and where I put those on, win, lose, or draw, and how to use options in order to implement into our portfolios to increase that overall yield. All right. So without further ado, let's talk about that economic data. Today's the day I was talking about. We got finally some economic data this week, and it is probably one of the most robust or best forward-looking economic data we get of all of the economic data. All right. So anyway, without further ado, remember, across the pond, flash PMI numbers are the ones that are most widely looked at. Yeah, we get those flash PMI numbers here in the United States, but we really look forward to our ISM, which is the Institute for Supply Management PMIs. But we got flash today, so let's talk about that. Across the pond, European flash services PMI coming in at 51.7. Manufacturing coming in at 51.0. Both of those, remember, above 50 is expansion in the economy. Anything below 50 is contraction. So then we finally go over to Europe, or stay at Europe, and talk about German and French PMIs. Actually, the European French flash PMI was 51.7 for the services, and French manufacturing was 51. So both expansion. France and Germany being the leading manufacturing sectors in the European Union. So that is what we are really focused on for them. We got German flash manufacturing coming in at 45.2, expected to be 44.5. Now, the services sector for Germany came in at 54.2, expected to be 53.0. They did revise last month's number up, albeit slightly from 52 to 52.9, so nice revision there. Seeing these trend upwards, if you're looking for a silver lining in Europe, German manufacturing trending higher, back towards that 50 number, so that is a good thing. They've had several in negative territory, but at least we're getting away from those low 40s that we saw earlier on, or actually late on in 2019. So starting to trend in a positive direction anyway. Then we got the rest of the broader European market coming in on the manufacturing PMI at 47.8, expected to be 46.9, again below 50, but trending higher, and last month's number revised higher as well. Flash services PMI for the broader European area, we got 52.2. That one was slightly lower than expected at 52.9, but again, a revision to last month's number, slightly higher. Great Britain's flash manufacturing PMI came in at 49.8, just slightly below that threshold of 50, expected to be 48.8. So again, trending higher. That is a good thing. We've been seeing these numbers in recessionary mode. Now we're starting to see them pull back out of this just ever so slightly. And now we're seeing the services PMI for the Great Britain area coming in at 52.9, higher than the expected 51.1. And again, they revised last month's number up 1 point from 49, which was below contraction, to right there at the threshold of 50. So good to see that there. And then here in the United States, we got our own manufacturing PMI coming in at 51.7. That is lower than the expected 52.4, and services came in line with expectations at 53.2. So ours at least above the watermark there at above 50. One thing to note, though, a lot of people were looking at that manufacturing PMI here in the United States and looking at that as a bit of a bummer because it came in lower than the expectations, albeit it was higher than that 50 threshold. All right, another thing coming out was the coronavirus. Second person has been confirmed to have that here in the United States. It was a 68-year-old woman or something like that that just traveled back from China. So that really has thrown a wet blanket on the overall markets. Believe it or not, that was the real catalyst, I believe, to start making the market slough off this morning. All right, but crude oil coming off again today, not being able to hold that bottoming pattern that we were looking at. I really thought that yesterday's bottoming pattern was going to make us kind of bounce back towards that point of control, but we're not seeing that happen right now. It is breaking below that, so it's breaking this setup. As we can see here, this usually is an indication right here that we have bottomed out, have flushed out some of those longs from that 60, just a big, huge sell-off there in the last couple of weeks. But today, breaking below yesterday's low, that basically is at this point, it really makes that looks like that setup isn't working, and we may very well go down and test that value area low. I didn't expect us to go as far as we are going. I did expect that sell-off when we were up in the 60s back down to this point of control, but I didn't think we would really flush. I thought we would more likely stay within this area and build out this volume node here, but looks like the market wants to build out a very large bell curve here, going down to test that value area low and maybe even fill in this area in and around that $55 a barrel, which I'm happy. Happy to be wrong that it's oversold there, because I would like to see prices at the pump come off a little bit, because that helps the overall economy. It allows us to create more velocity of money in this economy that has been somewhat struggling. So I'd like to see that for sure. All right, gold starting to move higher. This is a flight to safety. It kind of gives you a little bit of an indication that something is awry in the equities. Same with the bonds. Yesterday, they were up big, over a point on the day when we talked anyway. And then today, up 20 ticks, so about 12 ticks shy of that. One thing to note, we are back into that 160 handle. I've been talking about that. The sweet spot being between 157 and 160, really, because I don't really foresee them to raise interest rates. They're still talking about more quantitative easing going on. They love that easy money flow. It's the non-quantitative easing. They're not calling it quantitative easing, although it is exactly the same thing they did during the quantitative easing cycles. All right, so bonds up on the day, and VIX starting to come rise a little bit back into the teens again. Yesterday just settled slightly outside of the teens, but today starting to move higher there. You can see the Dow Jones Industrial Average just slightly in negative territory, but thing to note here, we did open much higher, and with that coronavirus coming out here in the United States, they have seen the wet blanket get thrown on them. Here, the NASDAQ off by about 13 ticks. We did create an all-time high today in the NASDAQ. The E-mini S&P is just slightly off of those all-time highs. The thing to note here, again, on the lows of the day, selling off on that coronavirus. You can see right here where the news came out about that. Earnings actually are coming out pretty decent, but we're seeing some weakness here. Earnings aren't as good as what a lot of people were expecting. So E-mini S&P is continuing to sell off. Not really a good sign heading into the weekend. I don't know that we're going to be able to recover this momentum to the upside. It looks like we are pretty bearish going forward here. Market not really trying to stop that slide today. All right, so with that being said, DAL. Yesterday I did a webinar on covered calls, all right? How to really be mechanical with our portfolio and try to lower our cost basis on that, especially in a time like this where we have no real discernible directional move going on. It, to me, feels like we are overdone to the upside. I am looking for a bit of a correction. It's the time to start putting on things that I've been talking about in this course for implementation of options into your portfolio, and that is the bearish risk reversal, things like that, the synthetic shorts. There's always a bear market out there somewhere. Something's always going to be struggling. Right now, the travel sector, Booking.com, the airlines, Boeing, all of those really seeing some weakness. I have a bullish trade on in DAL, which is Delta Airlines, but I was very concerned about the upside. And I thought, you know, I played this just to go up and test those 52-week highs because I really believed that this coronavirus was going to be more isolated to China, and that, you know, it wasn't necessarily going to affect these airlines so much. But now we're starting to see that kind of migrate over here to the United States and other places in Europe. So it is becoming somewhat of a real concern. I don't necessarily want to get out of DAL at this point. I'm in a mode of lowering cost basis on this. So I went in and sold some calls in there and decided, you know what, those 63 calls look pretty good. If it goes up and tests 63, I'm going to look to get out of this trade. So I did a covered call on my synthetic longs. Now, if you remember, I have this trade on at around 60. So just slightly shy of that, you can see that that market has sold off. So I am in negative territory with this trade. So I decided to go in and sell the February 63 calls in there for 39 cents. That's going to lower my overall cost basis by another 39 cents. If it goes up there and trades at the all-time highs, keep in mind, my break even now is 63.39. All right, so that's where I did the covered calls. I get to keep that collection. That's mine to keep, even if this starts to get called away from me. I'll talk about that great problem if I'm so lucky to have it go up into that area, because I have on that synthetic long strategy, right? So it's not going to just get called away from me necessarily, but I'm going to show you how to manage that trade if that were to happen. Otherwise, I'm going to continue to do covered calls, roll them out in time, and lower my overall cost basis on this trade as we move along. So just like I did with McDonald's, managing that position, just like I'm doing with eBay. All right, all of those things are ways to manage a risk in your portfolio, and I talk about that in this course that we are doing right now, implementation of options into your portfolio. So this is really building out a portfolio, and how when we have stocks in our portfolio, how we manage all of that. So very important. I'm here to teach you guys how to think for yourselves. I don't want you guys to lemming off the cliff with me necessarily. I don't like the herd mentality. I want you guys to make your own decisions and know immediately what strategy you can implement into your portfolio to take advantage of that assumption. All right, so that's all I got for you guys. Also, we're doing Wealth 365 Summit right now. This whole week has been jam-packed full of great speakers. My slot today is at 3 o'clock Eastern time, so check that out. Go to protraderstrategies.com. You can sign up for that. I've been sending out links, so you can check my my feed on Twitter at Wolfman's blog and get it signed up for that. So you can take advantage of it. Hopefully you've already taken advantage of it, seen that link, and jumped on board for this summit, because it's like 90 plus speakers all week, and just great giveaways, all kinds of stuff. So it's really important to take advantage of something like this when it comes around. All right, that's all I got for you guys. Other than, if you can't take that, take it easy.